Hello traders, Gary Wagner here. It is 12 noon in Honolulu, 6 o'clock in New York on Tuesday, 23rd day of April 2024, and this is the evening report for gold and silver. Gold prices did steady a bit, but traded lower on the day. Currently, we have the most active June contract at $2,335.10. That is down 60 cents from the close in New York. In New York, gold lost $5.40 or 0.23%. That's an important number, and I'll show you why when we look at the dollar in a second. The reason today's decline in gold of 0.23% is so important is we're looking at a daily chart of the dollar index, which declined by 0.40%, almost double what we saw in terms of a drawdown in gold, which means that there was continued selling pressure, dollar weakness added to the value of gold. Silver managed to bank a small gain of 0.42%, almost the same amount as the dollar decline, which means that in essence silver was neutral today. The fact that it's a green candle does not surprise me, seeing as silver declined by over 5% during yesterday's sell-off. Although gold's sell-off today was fairly tepid, realize it would have been much greater if we had seen dollar neutrality. But what is most interesting about the activity today was the low that gold traded to on an intraday basis of $2,304.60. You can see that with this large wick right here. Now, market participants are squarely focused on economic data rather than geopolitical tension, with the release of March PCE numbers on Friday morning. Current expectations are anticipating that inflation will remain elevated at their current level or a little higher. The actual numbers are in my opening letter. And if that occurs, that would continue to put bearish pressure on gold, taking it lower. We talked about the fact that the next real level, should gold continue to move lower, comes in at around $2,280, the 38.2% fib retracement. But to get a better indication of potential areas of support, I have converted our daily chart into a weekly chart and then extended the Fibonacci retracement numbers all the way to the left-hand side so we could look at different price points. The first price point that comes to my attention is a top that occurred in August of 2020, and that came in with highs just above $2,280, and the closes itself came in at approximately $2,269. That also matches loosely with the top that came in March 2022, but the real bodies came in at around $2,180. The same with these highs that came in May of 2023, which means that I think that $2,180, should gold come under a lot of pressure, would be a significant place to look for major support. And that being said, we could see gold retrace just to about $22.63. It is based on this closing price that occurred back in August of 2020. Looking at silver, I am also using a weekly chart so we can combine our Fibonacci data set along with recent tops and bottoms to look for logical areas where silver could find support. It has broken through this one top that came in March 2022. You do have this top or series of intraday highs that came in April 2023, but below that is the 50% retracement at 2580, and this rounded top here, as well as this area and this area that came in November. Because of that, should we see silver decline further, I would look for support to come in anywhere between $26 and about $25.80. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.